Hello everyone. Yesterday I read an article in Rogers.com that SEBI is conducting an investigation on the Jane Street Capital regarding their trades in Indian derivative market. So in this video, let's look at those first, like who is this Jane Street and what they do, etc. And then we'll discuss our regular pre-market report for today, 10th June 2025 for the Indian stock market in terms of Nifty and Bank Nifty. I mean, if anybody wants to see that article means, please have a go. I will attach the link in the pinned comment. Coming to the article, it mentioned SEBI is investigating Jane Street Singapore PTE and JSA Investments asset. From the face of it, it seems like some Indians in the Singapore is executing the trading and manipulating the Indian market asset, but that's not the case. Jane Street is the biggest trading firm in the world from US. They are really huge. Just to give you perspective, according to Global Trading in 2024, they accounted for 10% of all the equity trades in North America. So it's not just US, including Canada and Mexico. If we consider the ETF means like S&P 500, Nasdaq, they accounted for 24% of all trade in any given day on the primary market and 16% of the volume in the secondary. In Europe, 17% of all the ETF trade. Here, you might ask me, Shara, I don't care about US or Europe. What about India? What's their control? To answer that, I don't have the 2024 value, but in 2022, they were roughly 12% of all the traded volume, and in 2023, it increased to 14% of all the traded derivative volume. So, based on that, I'm guessing in 2024, they might increase it further to 16 or 17%, just like US or Europe. Think for a second, one company having the volume of 16-17% means, then how they are not controlling the market. Here, another problem is they got multiple companies which they registered in India, Singapore and Mauritius. Hence, their trade positions not only included in FII but also included in DII as well. So, on the outside, it seems Indian DII controlling the market, but it seems not FII under DII skin. Now, regarding the SEBI's investigation, what they said is that apparently this Jane Street will invest or short like 1000 crore rupees in HDFC Bank or ICICI Bank in one single day. We know at present Bank Nifty is like over 50% of their weightage is just on these two stocks. So this will manipulate the Bank Nifty. As an arbitrage, Bank Nifty will manipulate Nifty. And it is also one of the reasons why SEBI is changing the Bank Nifty weightage rules. Now, by doing this in 2024 calendar year alone, Jane Capital earned over 17,000 crore rupees from Indian market. To give a perspective, the second best option trading firm earned 4,000 crore rupees. Hence, Jane Street income from Indian derivative market is 4 times higher than the second best trading firm. So, why I'm telling all this? In a way, I'm telling to myself and to the viewers, please remember when we take trade whom we against it, so please be cautious. And as far as I know, there is nothing SEBI or Indian government can do about it, as they have been doing this in US as well as in Europe. Please remember, single player controls over 15% of the volume. And another thing is, if SEBI wants to limit Jane Street influence means, then they have to reduce or cap the individual stock weightage in Bank Nifty by further like max of 10 to 15% per stock. Anyway, it is what it is. That's all I want to convey about Jane Street. Moving to US market, as we know, this week, May month US consumer inflation is due on Wednesday night, which will be very crucial for the next week Fed interest rate decision. For that consumer inflation, last night analysts released their projection that the core consumer inflation to increase slightly to 2.9% from 2.8% on April month, whereas the overall inflation expects to increase 2.5% from April month 2.3%. So the macro expectation for the moment is little bit non-favorable, but okay, not bad. Hence, US market traded somewhat negative bias. However, US Treasury Secretary and Commerce Secretary said their meeting with China on Monday in London was fruitful and they agreed to hold the Trump's reciprocal tariff for China until August 12th, which market took that as positive and in turn pushed the US market to positive area, but in the end closed around flat. Dow Jones decreased just 1 points, S&P 500 up by just 3 points. So we can say both of them closed around absolute flat. And Nasdaq outperformed, was up by 0.31%. In case of VIX, it increased over 2%. From below 17, it moved above 17. Regarding Indian ADR, as it is, both the banks ADR, ICICI Bank and HDFC Bank, both closed negative over 1.5%. On the other hand, Wipro ADR increased 1.7% and Infosys ADR increased 0.47%. So, what does it mean? I mean, in Indian market itself, yesterday ICICI Bank closed negative above 1.5%. I guess reaction to the MCLR potential reduction, and Wipro stock increased 1.7% as Asim Premji moved 5,000 crore rupees worth of shares to the partnership holding from his own trust. So, considering all, at present, all of the stocks arbitrage indicating the flat to positive opening. About GIFT Nifty, early morning it traded at 25,232. For some reason, yesterday the premium dropped to 60 points, but generally this time it's an indication of reduction in bullishness. Let's see, but equating to the spot, for now it's indicating gap up opening of marginal 40 to 60 points. In case of institution wise, for the second session in a row, both FII and DII were net buyers. FII net bought for near 2,000 crore rupees. On the other hand, DII net bought the shares for 3,500 crore rupees. Then coming to derivative market open interest analysis. First, on the index option, last Friday proprietary traders had net 5% open interest on the bullish position. That yesterday dropped marginally to 3.8%, which means it's still positive but reduced compared to Friday closing. Whereas about retail traders, on Friday they held net 5.5% open interest on the bearish side, which they also reduced marginally to net 3.5% open interest on the bearish side. So still negative but improved compared to Friday closing. Whereas on the FII case, they are having neutral position but buying both call and put options, which means they are neutral but expecting a breakout or breakdown. In case of index futures, FII maintaining the short position 80% closer to Friday, but proprietary traders increased the short position to 60% from 56%. So, considering all, still proprietary traders makes more money if market goes up, whereas retail traders as a cumulative makes more money if market goes down. Then, economy wise, Rogers.com projected India's consumer inflation for May month to come as 3.3%, which is good and positive. It's due to release on Thursday evening, but for today, we can expect market to react for this projection. Other than this, for Asian Paints and Indian Bank, today is the X record date for the dividend, so we can expect those stocks will be on focus. As a summary, US market closed flat to positive, Indian ADR arbitrage indicating positive bias, and GIFT Nifty indicating the gap up opening, which is good. However, please be cautious. Today is Sensex weekly expiry, so potentially that related volatility we could expect. Moving on, from the stock wise, Blue Star, Oberoi Realty, Torrent Power, Mastock Shipping, ICICI Bank and Lupin are some of the 29 stocks that got an increase in open interest along with a decrease in price, indicating the short build-up. On the other hand, IEX, RBL Bank, Fortis, IAFL, Mankind Pharma and IRB are some of the 124 stocks that got an increase in open interest with an increase in price. These stocks indicating the long build-up. About the things to look out, nothing on early morning that I could think of, whereas on 11:30 am, UK unemployment rate is due, and in the night for US, EA short-term energy outlook are the things we need to keep an eye out today. Coming to technical, Nifty opened 160 points gap up and was positive throughout the session, then closed above 25,100. However, on the daily chart, Nifty formed a small bearish candle, but on the positive note, the upside gap remains unfilled despite the range-bound action. In addition, it had a breakout above the falling resistance trend line and traded near the upper end of the Bollinger Band. Furthermore, Nifty sustained above all key moving averages and with RSI above 60 mark. Hence, as an overall, the underlying trend still positive and Nifty is expected to face immediate resistance at 25,200 followed by 25,300 as long as it holds above the 25,000 support level. In case of Bank Nifty, similar to Nifty, it also opened around 500 points gap up and remained positive throughout the session, then closed above 56,800. Thus, on the daily chart, Bank Nifty also formed a bearish candle. However, it continued to sustain above the upper Bollinger Band and traded above all key moving averages with RSI and MACD showing a positive crossover, indicating the further positive trend. Hence, if Bank Nifty manages to maintain a sustained move beyond 57,100, then we can expect a fresh rally towards 57,700 to 57,900. On the downside, support is at 56,700. As per the weekly options data, the maximum call option openers was at 26,000 strike, followed by 25,500 and 25,800, with maximum new call option rating at 25,100 strike and then 25,400 and 25,200. On the put side, the maximum openers was at 25,000 strike, followed by 24,500 and 24,800, with maximum new put option rating at 25,100 strike and then 24,400 and 24,500. Thus, from options data, Nifty is likely to trade in the range of 25,000 to 26,000 zone in the short term. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.